Something a little bit more close to home, though, and this kind of relates to something that you and I were speaking about earlier, is all of this money that's getting pumped into artificial intelligence. Like, the equity market has been driven almost singularly by AI as a theme. The economy, as we mentioned earlier, has been driven almost singularly by AI as a theme. And while no one can argue that this stuff isn't cool or impressive or even like borderline science fiction-y, the economics of it are still a black box. Like, nobody really understands how these companies are going to be able to generate sufficient revenues, forget about profits, but sufficient revenues to justify several $1 trillion worth of capex. It is still a huge question mark. And if at any point, one player in this game decides, like, I'm going to go sit out, right? I'm going to the bench. I'm waiting things out. There is the very real risk of like a domino effect where the other players start to say, okay, maybe I don't have to spend so much. Well, if he's not spending as much, then maybe I don't have to spend so much. And then the whole thing deflates, and it deflates very quickly. But that, I think, is a risk that's easy to ignore when you consider that, everybody's using this stuff, everybody's got a subscription, and so surely it must be economically viable. That's not necessarily true.